Now, we just had the worst day in over a month as the AI tech sell-off intensifies as it continues. The Dow moving to new highs the previous 2 days to create the illusion, oh wow, we're going to just keep going. Nasdaq's not making new highs. The S&P's not made new highs. The Russell's not made new highs. Nvidia's not made new highs. We got Nvidia earnings next week. The Dow 30 stocks, the Dow 30, rising to new highs. First with FedEx, then with the banks yesterday. And I told you, and it's reversing today off of major resistance, that's being done on purpose to be a distraction away from the AI sell-off that's happening. To create the illusion, this is massive rally for the stock market. And when we're rallying back up, just filling some gaps, as I warned you last Friday, would happen. We had those rallies to new highs on the Dow, a closing high, and then a closing high with the new intraday high. It was yesterday, and again, slamming into major resistance, but the Dow turns today and drops, 1.65% drops, nearly 800 points, 798 points, rounding up, dropping back below 48,000. The S&P dropped by 113, down 1.66%. It was down at lower levels during the session, attempted a little bit of a recovery. Signals flipping right back to a bearish reversal of conditions today. I warned you this was going to happen, setting up that lower high with the hanging man candlestick. And then the Nasdaq sold off 2.29%, down over 2.5% at the lows of the session. It was down 536 points. The Russell down the worst of all. The Russell down 2.77%. Again, we got that warning signal on the Russell as it made a lower high, as the S&P made a higher high on October 29th. And that was the day I told you I thought we topped with the day of the Fed and warned you of that going into the Fed meeting. The VIX soared by 14%. It was up much higher. We got a recovery by the end of the session, a little bit of recovery, 14.22% at the 20 area. And again, as I warned you earlier in the week, we're bouncing off the 50-day moving average. VIX is warning something's about to happen. But again, the herd, this time it's different. Doing what they orderly do. And again, the market's about to play catch up to Bitcoin, which is collapsing down to new lows. I see my latest Bitcoin video. I'll link it at the end of this one. I did one earlier today. We're seeing distress in the housing market. We saw new foreclosures jump by 20% in October, 20% higher from the year before. Completed foreclosures were up 32% year over year. There's absolutely nothing to worry about. There's nothing wrong with the economy. About to start a bear market, we're about to start a recession, and we have already started a bear market. People just don't realize it yet, as I keep saying. Rally back up, which was a bull trap, dupe people into believing, and create that illusion while we continue to see the distribution, the tech sector, and again, the AI sell-off. We're being told, no. You got the so-called experts telling us, again, these are the stock market's at bargain prices for AI stocks. Tom Lee says it's cheaper than Costco. Nvidia, at these nosebleed levels, it's the bargain of the century. That's my words, not his. But cheaper than Costco, AI stocks really in good shape. But you got Tom Lee running around telling us there is no AI bubble. And again, there's an AI bubble. AI bubble is bigger than the dot-com bubble. I have these people that, for social media, and I have people even comment to me, the Dow's breaking out. This proves we're just going to keep going. And it's designed to create the illusion the entire market is going higher. The Dow, which is only 30 stocks, okay, and it was helped by FedEx in the week, and then it was helped yesterday by the banks. It moved, closed above this level, again, all over the internet, all over social media. It's a breakout! Then we reverse hard, give back most of the 2-day rally that we had, completing a divergence on the RSI. We're slamming into major resistance in the weekly time frame. You've got the divergence on the MACD and this larger one that's taking place. The Dow, no different than the other averages, slamming into major resistance in the weekly time frame. But I keep saying the Dow, it's designed, it's being done with the Dow, which is only 30 stocks, to distract that we're getting the AI sell-off. The AI bubble is now bursting. It's just people don't realize it yet. Dow's rallying up into this upper channel line right here. Now, actually, the transports did move above this high right here, so there's no recent divergence, but you still have this larger one from the previous peak. The Dow's moved to new highs, the transports does not. And again, you have the larger one going back to 2021. The transports never did make new highs. So this larger Dow theory sell signal as the Dow slams into this trend line. We did it previously, just over 2 weeks ago, turned off of it with the topping tail. We're doing it again, but the rest of the market is not. The Dow, the Russell, the Nasdaq, Nvidia, and the S&P all turning off major trend lines of resistance, along with Bitcoin. Bitcoin's already dropped 22%. Bitcoin's dropped 22%. The market's about to play catch up. With this channel on the Dow, if I include the shadow, we're getting a slight overthrow. If I exclude this shadow from the 2022 low, we're slamming right into it. We've gotten a slight overthrow, turning off of it, getting a topping tail in the weekly time frame, by the way. The other way to draw the channel, and again, sometimes channels are best seen in hindsight rather than current price action. But if we exclude the shadow here, connecting this low, and this low, and you connect this high, and then we're slamming right up into it, slightly higher if we exclude the shadow there. Whichever way you draw it, you're hitting resistance either here or you're slightly overthrowing it. You're getting a topping tail in the weekly time frame. Not a breakout, it's a fake out. It's Kool-Aid for the herd, so the big money can sell the AI stocks and to not have that headline. But the headline is, oh, the Dow's making new highs. Distraction from what is going on. Again, with their log scaling in the weekly time frame, the Dow is forming this massive rising wedge coming up into this trend line right here and turning down off of it. You have this massive rising wedge reversal pattern from the 2020 low. The channel I showed you was previously from the 2022 low. We look at our linear scaling here. You've got the channel, you've got this upper boundary. We're slamming into it from this low right here. Also, again, the trend line from these lows, the channel there. The herd, the experts on the financial, it's a breakout! We're slamming into major resistance. This is what I was telling you. Rallied to a new high with the Fed. Historically, the Fed rate cuts were associated with sell-offs in 2007 after the initial cut. I think we're seeing that now, as I've warned so much about. If you think that this is the opportunity of a lifetime here for the Dow, good night. Good luck to you. Coming into major resistance levels. Please support the channel with the link directly below. If you like the charts, you like the indicators, please let me know that by supporting the channel. Most YouTube channels have sponsors. They contact me all the time. I turn those offers down. I don't want to sell you anything, but I need your help in order to make it work. I need you to partner with me and support the channel. Follow the link below. It'll take you to a secured site. You can donate any amount you want or make it a recurring donation. If you do that, I thank you. But anything helps. If you could take a moment to do that, I would really, really appreciate it. If you could step up to the plate and help out today, that would be very, very helpful. I thank you for your consideration for that. Now, again, I'm having signals turn back to bearish on the S&P on mini signals. Right here, not yet. Got a bearish reversal of conditions today, and other signals turn back to bearish. And again, some of the signals remained bearish on the S&P. We have mixed signals as it went sideways. I think we'll see this turn back to bearish. I think we have something like what we had over here, where it turned bullish briefly and then turned right back to bearish. Here, turned bullish for a little bit longer and then turned bearish. But I think that's what you have here. If you look at the Nasdaq, we saw the same thing back over here before the February sell-off. It turned bullish briefly and then it reverted right back to bearish. And I think that's what we had right here. And again, Nasdaq's remained bearish. The rebound back up from Friday's low. Other signals remain bearish, like here on the S&P 500 and here on the Nasdaq. As I said, some signals turn bullish with the Monday rally. Here now reverting right back to bearish again. It's likely we're going to end up getting a lower high, lower low. Nasdaq bearish. S&P, sorry, I had to cough. I'm recovering from surgery. I'm sorry. But again, here S&P remained bearish even through the rally back up. Some of my signals remain bearish, others turn back to bullish. Momentum flipping back to bearish today with the reversal of conditions. As I've said, I believe we topped on October 29th, major resistance, and I believe now set up a lower high. I've been warning you about the VIX. The VIX is, again, telling us that we're about to have a lot of volatility in the very near future. We're now seeing that volatility resume, the sell-off resume now. Rally back up was a bull trap to dupe the herd. That's why we got the headlines about the Dow, to dupe the herd. AI sell-off is resuming. Now, the VIX, again, yesterday bounced off the 50-period moving average. I warned you about that. I warned you we were going to surge back up above the 200-period moving average. See the MACD firm up. Mark this one now as well. I warned you. The VIX is warning you. You can ignore the warning. You can disregard it. You can drink the Kool-Aid. You can be in denial. The VIX doesn't care. The market doesn't care. The market's still going to sell off. Look at in crypto what's going on with Bitcoin. I mean, the herd in the crypto community is kicking and screaming. Bitcoin is collapsing, and there's nothing that they can do to change that. I told you, Bitcoin peaked on October 6th. Got major sell signals at resistance that day and the 2 days following. Seen it play out with Bitcoin immediately. The stock market had a peak on October 9th and 10th on the S&P and Nasdaq and went a little bit higher with the Fed and is now selling off from that peak just over 2 weeks ago. The asset with the most volatility peak, Bitcoin. Then stock market follows, and the commodity bull run ends after that. And that's why I say that gold is going to sell off here. It's bottomed here. Maybe we get one more leg down, but gold is going to go higher towards 4,500 to 5,000 because usually the commodity cycle will end after the recession starts, after the stock market begins the bear market. Commodity cycle is usually the last to end. Gold still may be in a larger ABC. That's unclear at this point, but I do think that gold will eventually make new highs. But then it will top as well after everything else. That's what it did the last time around. So again, the VIX is sending you a message. You can, hear no evil, see no evil, speak no evil, and put your hands over your eyes and your hands over your ears. But it is what it is. Got this pullback on the VIX, and that gave us a counter trend on the S&P 500, which I warned you about last Friday. Told you we're going to go back and fill some of those gaps, maybe all of them. We could sell off into NVIDIA's earnings next week, and I think it's after the bell Wednesday, maybe Thursday. I think it's Wednesday. And we'll see what happens with that. MACD firming up here. Again, it rolled over. Oh, no. And I got person after person. Oh, the VIX is broken. Time is different. The same nonsense that people said back with the bursting of the tech bubble. Same conditions present right here that you had present back over here with the 21% sell-off. And like I said, we peaked 2 weeks ago, just over 2 weeks ago, Fed Day on October 29th. And I believe the bear market has started. We're about to get a 26 to 30% crash or so on the S&P 500. If you don't believe we're going to get a sell-off, you better take a good long look at that MACD firming up at the center line and that bounce off the 50-week moving average. The VIX today was up 14%, 10.22%. By the way, stochastic turning back up. VIX is predicting that in the next 2 days, there is an 85% chance we get an update on the S&P. We may go a whole lot lower before we get an update. Let me say this. When you start going parabolic, when you start getting this taking place, you throw that out the window. It doesn't work. You start getting a sharp parabolic kind of a rise, immediately you may just see the bottom begin to fall out on the stock market with no bounce. Predicting an 85% chance of a bounce in the next 2 sessions. That means either Friday or Monday. As I said, you may go a whole lot lower before you get the bounce on the S&P, but it is predicting a bounce. 15% chance that fails. So a lot of signals play out pretty good, but like I said, you start getting the parabolic rise right now, then you throw that out the window. Now, I warned you that Let me remove the 200 period so you can see this a little bit. I warned you that, again, we got the bullish reversal of conditions. Back and filling these gaps, but I told you that was likely going to revert right back to a bearish reversal of conditions, which it did do today immediately, the very next day. Bullish reversal of conditions, bearish reversal of conditions. Because, again, for a lower high and for those gaps to fill, confirmation of a lower high is now coming with the stochastic rolling back over. Today, the MACD could not turn back up. We're likely going to see a lower high confirmed on the awesome oscillator. Again, the rally was a bull trap to dupe the herd into believing that the advance is going to continue and resuming. It's resuming when they ran it up so they can do more distribution with the AI sell-off. This is the S&P daily chart. We're likely headed back down to take out our 50 period and this low right here, and then we'll see, can we bounce off 65.50? But we just may blow right past through it. Again, moving towards recession. We're about to have a banking crisis. The Fed just injected all this money into the banks, the largest amount in 5 years. I heard out there and the influence, oh, this is so bullish, the Fed's doing QE again. They're injecting money into the banks because they're concerned about a banking crisis. The herd, which is addicted to QE, knows how bullish it is. Banks are at risk of failing. I mean, these people are gone, okay? They are so far gone, addicted to QE. When we drop significantly, again, the S&P probably 26 to 30%. Bitcoin's going to drop 40 to 50% to kick off the bear market. It's already down 22+% now. By January, I continue to say it, I think the Fed will panic. Markets will get a massive rally back up. And that's why I think that Bitcoin and the S&P will both form those head and shoulder patterns. Reverting right back to bearish, confirming our hanging man candlestick today on the daily chart of the S&P. I told you I was looking for a lower high in the weekly time frame this week, which we are now getting with this peak right here, and that follow-through bar in the weekly time frame. Show you it up close shortly. Again, if you look at the weekly time frame, we got the red awesome oscillator bars, our second one now. This is telling us momentum is starting to wane. Got that confirmation to the gravestone doji. Now we need to follow through either this week or next week. I'll be watching by the end of the week, by Friday tomorrow. Do we close below the 10-week moving average? Maybe get a bearish reversal of conditions. Where does that go forward into next week somewhere? Maybe once you get that, you will get a bigger sell-off. And again, I think you're headed back down towards the April low myself, or at least moving towards it. We have a rising channel line just above that area as well that I've talked about. MACD is about to roll over. The histogram is barely in positive territory with a reading of 2. You've got your stochastic rolling over. This is not a bullish chart. This is a chart warning you that you're about to have a sell-off. But again, most people super bullish at tops and super bearish at bottoms. People telling us we can't go down now are the same people that were telling us down over here that we couldn't rise back up. Again, I told you we were going to get a blow-off top. I think the blow-off top is done. I see evidence of that. Get the same thing going on with the Nasdaq weekly chart. Again, our red awesome oscillator bar, our second one. The MACD is about to roll over. Stochastics turning below 80. Again, these bearish divergences on these stochastics in the weekly time frame are a huge red flag. We got the confirmation to our topping tail, our shooting star candlestick. Now we need a follow through either this week or next week. Again, taking out the 10-week moving average, which has been acting as support, and flipping the cloud back to red like we did back over here with the February top. Nasdaq weekly chart here. Nasdaq daily chart could not flip back to a bullish reversal of conditions. S&P did for 1 day. We got rejection at the 10-period moving average. Again, the 10 is about to cross the 20. Again, I talked about this in great length and detail yesterday. We already have that with the Russell. The Russell's leading the charge lower. Nasdaq and S&P are going to follow, getting the bearish cross of the 10 and the 20. We're just above our 50. We'll see if we take it out. Again, you're likely headed back here for a test to the 24,200 area or so, and then we'll be watching. Again, do we just blow right past that area? Do we try to get some kind of bounce? We gapped lower today. We'll be watching today's gaps. We may not fill these gaps until a much later date. We'll be watching these gaps from today. Watching, again, we couldn't even get any green on the awesome oscillator. Does it just start going negative? Does the MACD go negative? Now that we have the stochastic rolling back over here, we're confirming a lower high. If we take out this low right here from Friday, you'll have a lower high and a lower low. And that is a reversal, a change in trend. Nasdaq daily chart here. Now, I told you yesterday we got a hanging man candlestick. Remember last Friday? Let me start here. I told you, again, just over 2 weeks ago that, again, I believe that we topped on the Fed day with this hanging man candlestick slamming into major resistance. With that move, the S&P had dropped 4.16%. You got the bottoming tail. Remember, we had the gaps down. You got the gap on Friday that created this bottoming tail and this hammer. I told you on Friday we're going to rally back up and try to fill some of these gaps or all of these gaps. I told you and told you and told you I believe the top is in at major resistance and that we'd establish a lower high. Some people cherry pick what they want to hear. Oh, you're saying the top's in and we're selling off. That's great. But they ignore that I said we're going to go back towards the moving averages, move towards the gaps, establish a counter trend rally. People have selective hearing. They only hear what they want to hear. I talked about a rally with the bottoming tails at the 50-period moving average at great length and detail in my Friday video. It happened. I was right. We rallied back up to fill some of these gaps here. And again, we got a hanging man yesterday, and I told you this is a bull trap that has set up. Oh, the Dow's making new highs, the Nasdaq and the S&P are next, and this thing's just getting started. And again, here we are at nosebleed levels at major resistance. I heard drinking the Kool-Aid as they always do. Now we gapped lower today. We confirmed the hanging man, and I told you this hanging man is like the hanging man over here. And we got confirmation fall through. Now we need confirmation fall through to this hanging man. And again, to establish a lower high and a lower low, you need to take out last Friday's low, and you'll have a lower high and a lower low. Still have this head and shoulders in play. If we come down and try to bottom here around the 100-period moving average or horizontal support at 65.50, right on the nose. That was the October 10th low. Trump threatened 100% tariffs on China. We're going to get a bearish cross of the 10 and 20. That's about to happen. That could happen by tomorrow or Monday. But we're likely going to take out this low, and we'll see if we try to bottom down here somewhere and get a right shoulder. I talked about this possibly being it with a neckline that is sloping higher. I don't think so. Again, I told you that's possible, but I think it's more that we're going to come down in this area and then try to get a rebound back up. And it may be that we come back and try to fill this gap if we continue. Well, I didn't do that very well. If we come down here and then we try to rally back up, that might be an area that we establish a right shoulder. And again, no guarantee the pattern sets up. It doesn't have to set up. Could. Now we gapped lower. We could try to fill this gap at some point. We may not fill it at all. We don't have to fill it. But gaps sometimes fill. So we'll be watching that. There are gaps that never fill. But oftentimes they do. The gap is created because futures had started to sell off overnight. By the open, futures were lower, and that created this gap, S&P futures. But a big ugly bar reverting momentum right back to bearish. Turned bullish yesterday. I told you, again, it could just be brief and we could revert right back to bearish. As I told you that I thought we topped and I'm looking for a lower high. We're likely confirming a lower high. Again, we turned off the upper Bollinger Band. If we come down in here, you have the 100 period, you have horizontal support, you have the cloud. We'll probably drop under the lower Bollinger Band here, and then we'll see if we try to get some kind of bounce down in this area or just under 65.50. But again, the stock market is topped. We're now establishing a lower high. See if we get a head and shoulders. If you've got a wave 1 and a 2 down done, you're in a wave 3, or this whole thing could just be a one big wave 1 with a leading diagonal pattern setting up a series of 5-leg push lower that would eventually give us a push back up. But again, it is possible that we have wave 1 and 2 done, and we're now starting a wave 3. So certainly possible. Don't want to rule that out. We have 1, 2, and we're now going to get 3. And if that does happen, then you're not going to get a right shoulder. Just a possible pattern in play. No guarantee it sets up. But you have these massive divergences that are now beginning to play out. And again, heard today, whoa, what's going on? Who's selling? What's happening? Absolutely incredible. Again, told you I thought we topped here. I told you I thought we'd establish a lower high. I told you I thought we'd bounce and get a lower high. These things take time, but because they don't play out immediately, oh, we just don't keep going. We dropped 4%, but we don't just keep going. Bounce. Any bounce is a gift to the bears and an opportunity to the bulls to exit long positions. I doubt they'll take it. We rallied up into the channels of resistance. I'm playing that resistance. Tried to play the resistance over here. But there was no, with the October 9th high, there was no confirmation of fall through to this reversal bar. All stops triggered with the push here above that October 9th high. Now we're coming back down into the trading range with the lows from Friday last week, and now with this sell-off right here. So again, pushing up into the resistance levels I talked about in the weekly time frame. And that's all this was a short squeeze, and the institutions are selling into it. You're seeing distribution take place. Again, I believe that we've completed a 5-leg push higher to complete the cycle wave 5, to complete the super cycle, breaking down from the rising wedge. Here with our scaling, we slightly overthrew the trend line with the log scaling. We back tested it beautifully. I believe we're headed down towards the April low by January. I think by January you will be down there or close to it through the rising channel line, one or the other. That's why I say a drop of 26 to 30%. If you come down here, you're dropping 30%. This is what I think is happening. I think you're coming back to this 48.35 low in April. I called a bottom there because we hit major support trend lines and support levels. Here we hit major resistance levels. As I said, the channel, it's harder to call with the channel because you don't know whether to include the shadows or not. The weekly time frame, with this high, we ended up excluding the April low shadows in that channel, but you just never know. When we included the shadow, you were at it right at the October 9th high on the S&P. We dropped 26, 30%, and then I think the Fed does emergency cuts by January. Again, I have the guts to tell you what I think. I think that the recession is going to start in December or January. I think the government shutdown was the final nail in the coffin for the economy, and I think that will impact the GDP. I think we're going to see evidence in the labor market here that we're going to start seeing the negative jobs. Eventually, you're going to see the market get a bigger drop than what we had over here of 21%. You're going to drop 26, 30%, maybe even more if we take it out. But I think you're going to come down here. I think you've got this massive head and shoulders in play. That's when I think the Fed will panic in January. Just to tell you what I think it's going to happen late December or January. I think it's going to be January myself. If I'm wrong, it will be sometime in the first quarter, but it is going to happen. But I always tell you what I think. Very few people will do that. Very few people. Most people predict things after they already happen. I'll tell you exactly what I think before it happens. To watch for the S&P to drop back below the 200 period moving average. It did do that here in the 5-minute time frame. 50 confirmed it. So again, I'll be watching this gap, but like I said, we may not fill it until a later date. 5-minute chart here on the S&P. Warned you about the divergence here in the 15-minute time frame. And again, I was looking for a lower high as some of these gaps filled. But I talked about this price action yesterday at great length and detail. This is very interesting. It looks very, very similar. A rising wedge, you break the rising wedge, you go sideways, and then you get the drop below the cloud and the 50-period moving average. That's exactly what happened over here. We had the rising wedge, we broke down, we went sideways right here. Again, this looks very similar to this right here. I talked about that. And then you took out the 50 of the cloud, took out the 50 in the cloud. And when you rallied back up, those levels, the cloud and the 50 period became resistance. Here just to the 50, here to the cloud, just overthrowing it. Eventually it led to this decline of about 4.16% on the S&P 500. We'll be watching to see if we now make a move to come take out this low. And if you do, then you have your lower high, lower low in the daily time frame. So we'll be watching that. But pay attention to see what becomes of this gap right here. Do we fill it immediately or not? But I think we have our lower high in now. We'll be watching for the lower low to take out this low here from last Friday. And again, I warned you we had the gap and trap last Friday. I warned you that we were going to come back and fill some of these gaps, or maybe all of them. We didn't quite reach the one over here, 68.92, but we did fill the one from Friday. We filled the one over here, 67.96 and 68.52. All those got filled. We formed the rising wedge, and then we turned down. So we're hitting the cloud here. We're hitting the, we're just under the 200. Notice the narrow spread between the 50, the green line, and the 200, the black line. Very similar to what we have with the 10 and 20 period moving average. If we continue to sell off Friday, you could get the crossovers here immediately, or it might be as late as early next week. You're going to get the crossover of the 10 and 20 either this week or early on next week, and the same thing here with our 50 and our 200 period. Again, you still have this larger head and shoulders in play. Whether it plays out, we just don't know. Too early to tell, but it is a possibility. I'll be watching. If we come down here, do we get divergences surrounding this area or taking this out a little bit, going to the 100 period in the daily time frame? We'll be watching these levels closely. S&P lost 113 points today, 1.66%. We were told there's no possible way that is going to happen. The rally is continuing, and again, we've likely now completed the lower high. We'll see if we can complete the lower low before the weekends or maybe at some point next week. Earnings next week, so I'll be watching the Nasdaq. We still have this gap up here. Didn't get filled. This one did intraday, but again, still watching these gaps. Got a lower high here, returning back down. Again, the 50 and the 200. Are we going to get that bearish cross along with the 10 and 20 in the daily tomorrow or early next week? We still have this head and shoulders in play here on the Nasdaq 60-minute chart as well. If we bounce tomorrow, stochastics are becoming oversold here on the 60-minute chart, so we'll see if we can bounce or not. Or bounce and then resume the selling during the same session. We'll be watching the intraday charts. This beautiful back test, here it is with the Nasdaq daily chart with our log scaling. You have these beautiful back tests with the log scaling here with the Nasdaq, our log scaling with the S&P. Beautiful back test here. So again, I talked about that at a great length of detail yesterday, telling you we had that hanging man candlestick as we're back testing here. I think you're going to now come down, take out the 50, take out the cloud, eventually move back to sell off back to the April low. By January, I think that's where we're headed. Nasdaq up close here, again, selling off. We'll see if we take out the 50 period here in the coming days ahead. We do have NVIDIA earnings next week, so again, this gap still may potentially get filled, so we'll be watching to see how this unfolds. Now the signals are bearish on the Nasdaq. We have a lower high. We'll see if we get a lower low. RSI is dropping back below 50 on the Nasdaq. We got this massive broadening formation. Again, a back test of the rising wedge. Eventually, we're coming down towards this low, or maybe even lower towards the trend line from the previous lows. You're going to see 34 to 38% sell-off on NASDAQ. We do what we did with the bursting of the tech bubble. You drop 40% in about 10 and a half weeks. Somewhere between 34% and 40% decline for the NASDAQ by January.